Man, that's what we need. We need you to get a real mic for your phone. That's what we need.
Yeah,
just thought
do like an intro song. Wouldn't that?
Yeah,
like,
I think so. I think so. Guys, it is Monday. It is 5 o'clock, and interest rates are freaking going crazy. They don't make any sense. That's what we're going to talk about on the show today. Chris Peshek, I'm a real estate broker associate in just outside of Austin, Texas, and Dripping Springs, Texas. This is my buddy, Stephen Babcock. He is a mortgage loan originator at Motto Mortgage, and a damn good one at that. And on this show, we do a couple of things. Typically, we drink a little bit of beer or adult beverage because it's after hours real estate.
Well, some of us do.
Yeah. Some of us do sometimes. But we also talk about what's going on in random mortgage stuff and real estate stuff and just try to keep you updated on the news. That's why we do this show weekly. So, man, what are you drinking?
My friend, I am drinking a Heineken.
Very nice. The green bottle.
Yes. Are you drinking water again, my friend?
I'm drinking water.
Oh, I'm excited for a second. All right, okay.
Yeah, man. Dude, I mean, you know, I've just cut way back on the drinking. But cheers.
Cheers.
I'm still drinking a little bit, but I've just cut back on it. God, I noticed, I think I had 3 beers the other night, and man, I woke up feeling terrible. Wow. Okay. So anyway, mortgage rates, stupid what's happening right now. And I'm going to set the scene for this because I can say this and you can't. So guys, before the Fed cut their base rate by 50 basis points, what was that, 2 weeks ago?
Roughly. Yeah, about roughly 2 weeks ago.
Okay. Yeah. Before that happened, we'll call it the average interest or mortgage interest rate that you could get. This is a guy that I track on Twitter that does these every day. It was 6.11 with about a 220 basis point spread. So that means that you could get lower, you could get higher depending on your situation. But his average that he was seeing was 6.11. This was about a week before the Fed dropped their base rate. Okay. Fed dropped their base rate. Steve and I did a show that what the hell's happening, because when the base rate dropped 50 basis points, that number from 6.11 on his ended up going up to like 6.19. So we saw a nominal increase in mortgage rates, right? Am I tracking pretty close so far, Steve?
Yeah, you're just spot on. I'm just having trouble with my screen. Sorry. Go on.
And now the basis or the Fed rate has continued to just, I mean, it's held pretty steady, right, since that drop. But holy crap, last Friday, interest rates went up 1/4 point. So now this guy who, again, I track daily, and I can pull it up on Twitter. I can't remember his name. But his average rate now is like 6.5 something.
Yeah, rates right now are where they were roughly in August, maybe July.
I was about to say, I think we've given back every bit of gain that we've seen since July.
Yeah. So do you want to know why? I mean, does it?
Well, I mean, should we just jump into the article and talk through it? I mean, you sent me this article.
It's the exact same theme of what we talked about last week.
Yeah.
Which was that the market is forward looking. It won't wait around for the market to adjust. It'll adjust before the market adjusts. So it does what it thinks it's going to do.
Yeah. And we'll tell you guys, this is Zero Hedge, who has pretty politically middle of the road stuff, right? They'll rip on anybody.
Well, they're a
little conservative leaning.
I've found them to be as right-leaning as you could possibly be, but when it comes to economic,
Oh, yeah, I guess I should throw that
articles,
caveat in.
yeah, I found them to be wonderful for economic articles. However, you have to read it knowing that you're reading an author who is angry and on the right, and he's angry,
Correct.
but he's smart. And he goes by Tyler Durden, so you never know who he is, right? And some people do. I talked about it, but it's like a loose secret or whatnot. But
Right.
yeah. Long story short is, if you want real numbers on the economy, he will happily provide them.
Yeah.
Sorry, keep going.
No, you're good, and that's a good caveat. Yeah, the whole publication Zero Hedge is pretty dang right, but the economic stuff is, I mean, it's black and white. Mortgage rates jumped by more than 0.25%, 25 basis points, a quarter point, on Friday after a government report showed the labor market continued to remain strong. Average 30-year fixed rate jumped 27 points from 6.26 to 6.53% on Friday, according to data from Mortgage News Daily. That's where you always say you get your information. Mortgage rate index that is updated on a daily basis. This is one of the biggest single-day rate increases Mortgage News Daily has ever tracked. Not in the last year, not in the last 6 months, not in the last 2 years. That freaking blew my mind when I read that.
Yeah. Well, the
and
first
this-
question is, how long have they been tracking it for?
Well,
But
fair, but they've been tracking it longer than 2 years.
you'd hope so. But some of
Yeah.
these places come open, last 6 months and then make huge headlines. You're like, oh, hold on a second.
Good point.
But yeah, man, hey, it moved. I would say that's wrong. I mean, if I were looking at what I've seen,
Okay.
I've seen some pretty huge moves over the last few years, and the one that happened recently was big, but I wouldn't say it was the biggest move ever.
Well, it's set in a single day. So
Maybe.
it did qualify that. And I'm trying to see if mortgage rate tells us, Mortgage News Daily. You know what?
No,
Their
I actually-
history goes back to the 80s.
I do trust this publication to be accurate. So you know what? Let's keep going.
Yeah. Anyway, strong employment situation indicates a more robust consumer or customer demand for mortgages, thus potentially keeping rates higher and lowering any chances of a rate decline. Bureau of Labor Statistics released its employment situation summary report for September on October 4th. The report showed 254,000 new jobs were added last month, far exceeding 140,000 jobs that were estimated by experts. This is also up from 159,000 jobs added in August. In addition, the unemployment rate fell for the second consecutive month from 4.2 to 4.1. With the jobs report showing persistent strength in the labor market, mortgage rates surged. I mean, we can probably just jump off right there because that's the reason, right? These numbers came out from the Bureau of Labor Statistics, and they showed that our jobs market is freaking almost twice as good as what they were expecting.
So can I interrupt you real fast?
Yeah, I want you to.
Today, I listened to an update from the opposite politically leaning side. So it's someone that does economic updates on mortgages, but he's very left leaning.
Okay.
And he was talking about how all this is changing because of the perception. However, he also mentioned all of the false reports we've had over the last, year and a half. Almost
I knew
2
that
years
was coming up.
Yeah, but he's the one that brought him up. He's like, well, I'm not so sure I trust these numbers. And here we have someone from the right saying the exact same thing. Well, right now he's reporting on it at the end. He kind of says, but we'll see. So
Yeah.
the real question is, what happens in November? So
Because
You know-
why are you mentioning November?
well, there's an election in November, and a lot of people believe that the numbers that we're receiving are not accurate numbers. And so let's just say the opposite party takes power. You would expect that they'd pull a, oh, see what they've been doing kind of thing with the numbers, no matter who the opposite party is, right?
Right.
You would expect that, right takes over left, left takes over right. You would just expect them to come in and be like, look what they've been doing, right? Because it's just politically those are points for you,
Yeah.
It doesn't matter who you are. So I would expect that to happen. If it's the same party in power, You know, actually, with the guy that was just in charge, you could say something like, "Well, he didn't make the right decisions. Sorry, you know, maybe his mind wasn't there, and it was his fault."
So you're thinking clean slate, wipe it out regardless come November.
What it really looks like, yeah, is like, so it really looks as though real numbers will be revealed in November. I could be totally wrong on this. I hope I am. But it looks like we're going to get some sort of surprise, not October, but November surprise.
November surprise.
And I, you know, I think, I mean, how many times did they change the definition of recession in the last? I mean, that we know of, at least in the last couple of years.
Yeah, it's been several times.
They've redone how the inflation is even measured, so that you don't even have housing as part of the equation. You know, we take out groceries overall, and they used a few specific metrics of groceries, like milk, for instance. I think it is, you know, but like staple items instead of all of them, you know. So instead of tracking all the numbers, they track staple items, these specific items, you know, bullet point items. And that's supposed
pricing indices are way different over the last 3 or 4 years.
If you were to use the exact same metricity that we had in the 80s, we exceeded the 80s inflation. You know, anyways, they're playing all sorts of games right now, and nobody really knows what's going on with the numbers. And I've also seen that most of these jobs were government jobs, which is not good for economic growth.
I thought I saw that these were private jobs, private sector.
And when you boil down into it, they add back a lot of the second jobs, and it's when you dig into the dirty details, it's not very fun. But what I think you would expect in that case, that, okay, well then, hey man, if it's really worse, then they're going to have to raise rates. But the perception is that there's an orchestration going on, and that if they're saying one thing and doing another, then we have to accept the lie, basically. So if you're saying the economy is great, everything's looking good, then we're not going to bet that it isn't. But at the same time, they're playing defense. So right now, you know, we expect no more rate cuts. Is what yesterday's move and the day before that's moves like that says, we were wrong. They're not going to cut rates, and we're gonna raise rates on our own. Right? We're gonna go back.
And that's the thing. Right, because we were expecting at least one more rate cut before the end of the year, possibly a 50 basis point cut, and then another one at the beginning of next year, and then probably at least 4 or 5 next year. And now it's all gone flat, which is interesting to me. But anyway, Fratton, that guy's got too many N's and A's in his last name. Chief economist at Mortgage Bankers Association pointed out stronger than expected September employment report suggests a successful slow landing of the American economy. Everybody's been talking about the soft landing, right? And you know, we know we've got inflation and all this other stuff, but maybe we can get wages up enough to mitigate that danger that was about to happen. However, the report also stokes worries that inflation may not move in a straight line to the Fed's 2% target. He said, as such, the report could certainly slow the expected pace of cuts. We're already seeing that. And by the way, guys, we do like you to chime in with comments here. Please do, if you've got comments on this stuff. One thing I do want to point out, when they say may not move in a straight line to the Fed's 2% target for inflation, that's 2% growth of inflation. Just want to remind you all that even at the target, we're still getting more inflation. What's it at now, Steve? Do you know? Or what was it last month?
Oh my gosh, I don't.
And that's a monthly measure.
I don't. I'm sorry.
No, that's fine. I mean, it's been hovering north of 3, so it's been high, pretty high. And the Reserve has reduced its benchmark interest rates by 50 basis points last month, the first such rate cut since it started pushing up rates in 2022. We've talked all about that on the show. Agency has also signaled an additional 50-point cut for this year. Okay, there you go. That guy noted Mortgage Bankers Association is forecasting longer-term rates, including mortgage rates, to remain within a relatively narrow range over the next year. Well, just went flat. He just told us. Positive employment report will push mortgage rates to the top of that range, but we do expect that mortgage rates will stay close to 6% over the next 12 months. What's close to 6%?
What they're basically saying is that unless we get some certainty in the market on what the heck is going on, nobody's going to gamble their money right now. And the government doesn't look that solid. They look like they're on shaky footing.
Yeah.
They've been downgraded several times now in terms of their reliability.
Nobody's talking about that anymore.
But that's the thing, is that this other economist was like, well, how do you give me this great jobs report when you've got all these part-time jobs, many Americans having to work 2-3 jobs to make bills meet, right? They have record low savings, record high credit card usage. You have record high government jobs, record low private sector jobs. You have record high non-foreign citizen jobs being obtained, and record low foreign citizen jobs. So or I'm sorry, domestic citizen jobs. So people, U.S. citizens. You have all these things working against you. The tech sector is laying people off. They're not hiring like crazy. You've got this commercial mortgage crisis that's happening, but all of a sudden we're just great. We're fine. All the jobs are fine. Everything's great, man. We're good. Just don't look this way. Yeah. Right. And that's what it kind of feels like is, oh, dude, what's your problem? Why are you being so doom and gloom, bro? Why are you acting like that? What's your problem, bro? And the reality is that things aren't that good, but we're all being told that things are just rosy and fine. Yeah. If things were just rosy and fine, the rates would not have done what they did. I granted,
they reacted hard, dude. Like, that was hard.
What was hard?
The jump.
Well, yeah, but it, the market is like the mistress that doesn't lie. It's the mistress that looks you in the face and says, "I've been cheating for 6 months." Right? I mean, it just flat out gives it to you to your face. And whether you like it or not, but it's not political. It just says, this is what I think things are going to do. It doesn't matter which side you're on.
It's money, and people are trying to make money. So yeah, it's going to be the brutal truth. Money's not trying to stay in power. Money's trying to make money.
It's just a very interesting third kind of dimension out there. There's left, there's right, there's finance. And they don't really mesh well.
But okay, so let's dive into what impacts us in this show: mortgage rates and housing market. If mortgages were to start rising again, it could dampen an already cold housing market. In the first 8 months of 2024, only 25 out of every 1,000 homes in the country changed hands, which is the lowest rate in the last 3 decades, according to Redfin, which no reason to doubt them. The real estate brokerage cited high mortgage rates as one of the key reasons for the low home turnover rate. More than 3/4 of mortgage U.S. homeowners have secured a rate under 5%, well below the rates on an offer this year. Again, most of this year it was 6.5 plus, right, on just a normal market. This has prompted many homeowners to hold off on selling and buying another home using the higher rate, a phenomenon known as the lock-in effect. Rates fell to the low 6% range in August, but the drop has not yet resulted in a significant uptick in sales. You and I've talked about that. And you and I both called, okay, mortgage rates are going to start coming down in July, at the latest, because we've got an election coming up. Is that going to be enough to get buyers off the fence? Well, hell, they got them down to, just over 6%. And I don't know about you, but I didn't see a hell of a big shift.
We saw some, but it wasn't.
I was about to say, it was what, a little?
I mean, let's just play a theoretical game right now. Let's just say that tomorrow the Fed comes out and says, look, we're not going to tell you why, but we're going to lower rates to 0. So mortgage rates should be somewhere around 1 or 2% in a couple days. Do you think with the election coming up, would you buy a house right now? Or not just you? Do you think some people might have hesitation?
I think a lot of people would. I think there's still some people that would stay on the sidelines just because I didn't see the reaction that I anticipated with lower interest rates. So I think there's a lot of people that are scared of the election.
I think there's a lot of people that are scared of the election. Yeah. I hear a lot of people talking about, well, just see what happens in November. And they're not talking about who becomes president.
No. No, that's not what they're talking about.
Never in my lifetime have I heard this. I'm sure when, George Washington was transferring power for the first time, there was a lot of that. But I've never heard this before. It's kind of tough. Anyways, please continue.
Almost half of all U.S. homes for sale in August were on the market for at least 60 days, highest share since 2019, according to Redfin, again, pre-COVID. I won't divert on that one. Nearly 7 out of 10 homes sat on the market for at least 30 days. Okay. Redfin economist, that guy pointed out that even though home sales usually tend to pick up when mortgage rates falls, the recent dip in rates has not triggered such a trend. Instead, we're seeing the opposite. Sales are dropping and homes are sitting longer on the market. While the Fed's rate cut in September will give buyers a confidence boost, it remains to be seen whether sales will speed up in any meaningful way as we move into a slower fall season. In a July interview with the Epoch Times, Dutch Mendenhall, founder of RAD Diversified, a real estate investment trust, suggested that buyers with the means to purchase a home go ahead with the decision rather than adopt a wait-and-see approach. You and I have been saying that. Well, we had been saying that. You've kind of backed off on that the last few weeks.
Man, you look back historically, and we've done articles about this. I love this new article thing we're doing, by the way. Yeah. Where, if you bought a home in the last, 50, 60 years, 9% of the time, it's been a bad investment.
Yeah.
Right. So 91% of the time it's been, you've been happy about your purchase on your home.
Right. There's no other investment that even comes close.
Tell me what else you can buy that's good of a return, right? That kind of a thing, especially something that you're paying for anyways.
Gold damn sure doesn't escalate like that. Yeah, and you're paying for housing. Yeah.
If you had a 1990 mortgage on your house, man, you basically don't have much of a payment at all, compared to what payments are today. So even though I told you in the last show or two that I could see people hesitating now until after the elections because of all this uncertainty out there, I still think even if we have a crash, it should be a good investment, right? Because historically, real estate's one of those things, it holds its value. Unless you're buying a double wide or something, or a single wide, right? Those don't as well. But even they hold more value than other things, out there. So you can even rent it out and it could be a profit driving machine for you. I feel like real estate is not a bad investment almost no matter when you buy it. You
got to buy it smart, but
I guess. But if you bought a condo in Florida in 2008, right at the peak where it was worth half as much the next year, well, you've recovered and then some since then, and it's been a wonderful investment if you stayed the course.
Yeah, that's true.
Right now, if you sold in 2009, well, guess what? That's like buying high and selling low, in the stock market. You just don't do that, And by the way, don't buy a home unless you're going to stay there for 5 years. I think now it's 7 is the average.
Yeah, I think 5 is like, okay, you'll break even at 5 if we see normal appreciation. So we got to throw those caveats in there.
At one point in my career, 5 years was the historical average. So that if you lived in a home for 5 years, you would then break even after paying all your costs to get in, all your down payment, everything, and because of the appreciation. And then after that, you'd be making money every year. Right. I think that's changed, but the point hasn't changed. And that point is, don't buy a home to make money in 2 months unless you're a house flipper, right? And then that's a whole nother discussion.
Yeah.
Right. Yeah. The average homeowner, no, rent, unless you're gonna own it for 5 years or more.
Yeah. And I should have this is the last sentence anyway. If you wait, the home may be gone, or the interest rates could go up again. So now that's what we're fighting again as a buyer. Well, do we wait? Well, shit, they're telling us the interest rates might go up even more. So how do you wait if you want to get into a house? He stated, I believe eventually the loans will become more affordable. And at that point, homeowners can refinance to get lower rates. So basically, the end of this article wraps up the exact same way that we've been hearing people talk about stuff for the last 2 years. Great. I'm excited. Right? Because think about it. Date the rate, right? That's what everybody said.
I hate that.
Yeah, I do too. I can't stand it.
I can't stand that. To marry the house, date the rate. God, it sounds so salesy, right? Like, how could you? I challenge you to make it sound more salesy.
I can't. There's no way.
It's impossible. That is the most salesy you could. Everybody, listen. You should definitely buy right now. The rates aren't very good, but you just date the rate. You marry the house. Okay. Well, that's dumb too, because we had people that were not marrying the house. They were dating the house and selling very quickly.
That's right.
After my last comment, that's kind of an oxymoron, but still, or a contradiction, right? But you know, I mean, I can't stand that salesy thing. You know, everybody's different.
I'm saying. So let me ask you this, man, and I'm like, because seeing rates jump that much on a reaction from a jobs report, because you and I've talked about it. We've gotten manufactured jobs reports for the last 18 months at least. They go back and revise them every month. Why was this one different? Why did we see this giant knee-jerk reaction?
We didn't. I mean, we did, but it wasn't different.
But every month when the jobs report comes out, we haven't been seeing, we've been getting jobs, 200,000 new jobs.
Specifically, what happened in this jobs report was it contradicted the prior assumption that the economy was not doing well, and we needed to lower rates quickly to spur the economy so that companies could borrow more and hire more people.
And that's why we had the 50-point drop and all this other stuff. And this was
all of a sudden, whoa, wait a minute. The companies are already hiring bunches of people. We do not need to lower rates like we thought we did to spur that activity. Right. And that was whoa, wait a minute. If this is what the numbers are, they're not going to lower the rates. We were wrong. Let's readjust our forecast for those several rate cuts. Now, as of today, there is a small chance there may not be another rate cut this year.
Yeah.
Okay. So
like 30%, I thought I saw this morning.
Okay. Well, what happens now? Because it's October, right? Is it October now? We're in October.
Yeah, we're in October.
Now what happens in November during the election where they redo the numbers? They've redone them every month. I'm sure they're going to redo them again.
Oh yeah, it's gonna be revised.
Yeah. Do people even pay attention?
So, well, some people do. The finance people
will
do.
They? In November, will they?
I mean, I would have to think again. The numbers are numbers. Like, it's about making money. Like your currency doesn't have a political motivation. At least I don't think it does.
Well, no. God, I hope not. We got some issues then.
Yeah, definitely.
I just don't know. Well, it'll be very interesting to see what happens in December. So, I keep saying November, but the December numbers I think might have as big of an impact. We'll see.
So my other question for you is this: if we get this, well, like you said at the beginning, we're going into election. Somebody's going to be elected that is not in power now. Somebody, not some party. Somebody's going to get elected. Okay. If they take that as the opportunity to just level the field, like, okay, we're not going to inflate the numbers anymore. Joe Biden's administration was doing this, and Kamala Harris told him not to, or Donald Trump, that's the dumbest thing ever. Whatever. Okay.
It's a good impression, right?
Regardless, that actually came out okay, didn't it?
Yeah, morons. I'm sorry. Go ahead.
But if that happens and we level set, what do you think happens to rates moving forward? Let's say you and I have been right, like it has shown itself to be, that they've been inflating rates by freaking 80% every month, and all of a sudden it's a level set. What's the Fed going to do moving forward?
That would be the nightmare, but they would have to lower rates. We would have a crash landing instead of a soft landing. They would have to lower rates quite a bit to spur the economy again, and inflation would take off like you've never seen.
I was about to say, and you're going to have inflation shoot up. Interest rates are going to come way down. So if that happens,
well, the value of homes would shoot up too.
We're going to be right back into kind of COVID type of, I mean, hell, if interest rates drop down to 4, everybody's back in, right? That's just gonna,
I mean,
yeah.
Yes and no. Yes and no. I do believe a lot of people would jump back in, though. Yes. So now you have a 3% interest rate, and rates are at 4%. Your bigger home is going to cost you still a lot more than your current one.
Well, but I'm not necessarily even talking about the bigger home. I mean, there's people that want to downsize right now, but they can't because their smaller home is going to cost them more than their bigger one. So what the hell's the point?
So whoever I am doing my next loan, if I could, I would do an FHA loan.
Explain.
Well, FHA is transferable. It's a government loan. And
Okay.
if things do get rough to the point where the rates must be raised again, which I believe in a year or two, we're going to see much higher rates than we have right now.
You've talked about that a lot.
Ad
I mean,
nauseam.
yeah, you're thinking. Now, guys, I will say that Steve also said last year he felt like double digits were coming this year, but
We were
I think
almost there at one point.
we got close. I will say that's probably the only prediction that didn't come true that you've made.
And
So.
it did not come true. I was absolutely wrong on that. I'm happy to say. And I'm not usually like 100% right or anything. I'm kind of around, but still. But yeah, man, no, I do believe there's almost no way to get out of the debt that we've wrapped up. I don't know how we pay off the U.S. debt.
Yeah.
I just don't know every way I split it up. So let's get rid of the entire military. Let's get rid of the entire Social Security budget. Let's get rid of, you do all of that and you're still not making up for the debt that you're paying. I wouldn't know how to cut. I mean, you could go homeless and still not pay off the debts, from a theoretical, like a trying to compare the two, you know what I mean? They could just cut off everything,
Right.
Sell the house.
This is the guy that I was talking about. And he gets it from Mortgage News Daily. In fact, he may be associated with him. Hell, I don't know. This was his post this morning. Average 30-year fixed rate today jumps to 6.62. We were at 6.11 20 days ago. 259 basis point spread. So this is what he does. He pulls off Mortgage News Daily and just goes through 30-year fixed, 15-year fixed. So really, Lance Lambert, he puts it out every day. Really interesting follow. He's got a lot of other stuff that goes on. But, I mean, again, 1 week increase of 38 to 40 basis points. Again, we gave away everything.
Right. And you know what's funny
change.
about all this is that the Fed has lowered rates and they haven't done anything else.
Yeah.
Is that me or you?
I have no idea what that is.
Weird. All right. Whatever. Yeah. The Fed has lowered rates. They haven't raised rates.
Yeah.
And I had 2 private call phone numbers. Isn't that fun?
It's always fun. But anyway, I just wanted people to know if you're on Twitter, Lance Lambert, good follow. Good follow. Keeps you updated on stuff. But anyway, man, so yeah, like they're freaking going crazy. What we've seen over the last, I don't know, I'll call it 10 months. We're going back to this year. No, that's not right. That would have been a lie. What we've seen since May is relatively stable with slight down pressure on interest rates. It's corrected back up because of these numbers. Do you feel like as long as nothing crazy happens, we're going to see that same general downward trend? Or do you think that's gone? Like, what I guess what I'm asking is, was this just a correction? Like, oh shit, we were wrong. We listened to them and we shouldn't have. And now we're going to reset the baseline up? Or what do you think?
Historically, we don't pay off our debt. We just keep borrowing more.
Yeah. Print more.
So I think what we'll do is another huge quantitative easing, and it will just be another repeat. I think we're just going to repeat. But I also think at some point you can't degrade or downgrade rather our credit rating any further. At some point.
Oh, you
can.
can.
Now. You can't now. There's plenty of room now. But at some point the world government stop borrowing in your currency and start using someone else's currency. I'm afraid of BRICS, but I don't think they're really that much of a threat.
Yeah.
At least in their current form.
They've got to change a lot of stuff. But anyway.
They have a lot of people that have to get along. You know, it's historically been quite difficult to do. So we'll see if they can pull that off. But even if they could pull it off, you know, our banks around the United States and the UK and pretty much that kind of general alliance of the New World Order, right, has been buying gold in massive amounts that they just had not been doing before.
Yeah. And all of that's going on a little bit under the radar.
Unless you're an economist or you're in the unless you're in that field, because they're all.
And when I say under the radar, I mean to the general public who doesn't pay attention to it. Yeah.
Yeah, most general public have no idea that you know, world governments are. Did you know Poland has more gold than almost any other country in the world right now?
Really interesting.
Hope they can safeguard it. You know, they're all
Poland to Ukraine.
Well, Poland's right next to Russia and Ukraine.
I know.
Okay, all right. Well,
it was a rhetorical question with a quizzical look on my face. I apologize.
You know, you start looking at the economic purchases that these countries make. Like China, that bought like 2.5 years worth of grain in the last year.
Yeah.
Or you know, all of the world governments that are buying, you know, 5-6 years worth of income of their income, the GDP worth of gold, and have been for 3, 4, 5 years in a row, and making huge stockpiles of it. Whereas before they literally had a policy where they weren't going to do that. It wasn't in their interest. Okay, why? Right, and it's all conspiracy theories, right? Okay, yay, here we go, conspiracy theory Steve. Right, I'm not really even that guy. It's just,
well, it's happening. It's not a conspiracy if it's happening.
Well, I suppose, sure, right. But I guess at the end of the day, I think I know that the practical reaction, or not practical, the established narrative is that we are simply preparing for possible times of you know, uncertainty in an economy that has seen more certainty in the past. And so it just to balance things out, make sure that your money is safe, we've got gold. And okay, that's a reasonable thing to say.
Yeah.
But all of the countries of the world are all going to do it at the exact same time. There's no country that has decided not to do this. None. Right. And that's, but hey man, maybe we're adopting the gold standard again. That would be great to a certain degree. That would be great.
Yeah.
By the way, as a what's it called when you go to a bar and you answer questions?
Alcoholic.
No, when you play a game and you answer questions, what's that called?
Trivia.
There you go. As a trivia question, do you know how much gold, if you took every piece of gold on the planet? I think I told you this on one of the shows once. If you took every single piece of gold on the planet and put them onto 2 cargo ships, how much? Or how many ships? I just gave you the answer.
2.
You're right. Yeah. You took all the gold in the world, it would only fit on 2 cargo ships. There's not a lot of it, which is why it's perfect currency. You can't create it. You can't make gold. You can only mine gold. Find it.
That's, yeah, I got a lot of questions about making it a perfect currency too. But anyway, that's for a different time. That's impossible. Yeah. All right, guys. There you go. Hopefully that sheds a little bit of light on what the hell's going on with the interest rates, because I was planning another article for this week, and Steve goes, "Wait, let's wait for the jobs numbers to come out." And he sends me the shit Friday morning, and I'm like, "Oh God, here we go." So,
I just thought it might be a little more interesting. You know, I thought maybe something was going to happen, and we just wait a day or two.
That's how we plan this show. Let's just see what the government's going to say today.
I mean, was it good? I mean, my God, you look, the headline right there. So
yeah, basically, yeah. So, guys, next week, same thing. If you've got questions in the meantime, let us know. If there's a topic that you want us to talk about or a headline you want us to talk about, let us know. All right, Friday. Here's our other lender. Friday.
Bro, I feel your pain, brother. That sucks. Yeah, not fun. Not fun.
Holy crap! You know what, Trent? We need to get you onto a show with us.
I like Trent. I met Trent in a continuing education class one time.
Yeah,
Trent,
yeah.
okay.
We need Trent next Monday. Can you be ready to go at 5? Text me. You got my number. All right, guys. See you next week.
See you, brother.